Welcome back, everybody, to the weekend show where I'll be breaking down the stock market. So, before we get started, please hit that like button. And if you're new here, definitely consider subscribing. Now, if you want to go above and beyond, support the channel and get live trading, daily trade ideas, swing trade ideas, and all kinds of long term and short term setups, definitely head over to Patreon. And that link will be down below in the description. And now, let's get right into the market. All right, so what do we have here on stock market Friday? Well, Dow is pretty flat, Nasdaq same thing, S&P hitting a brand new all-time high, but then flat on the day, closing at a brand new all-time high for the week, and Russell going down 0.5%. If you look at my screen, advancing 41.7, declining 53%. We got 11 sectors right here, and you can see basic materials led the way: technology, consumer defensive, real estate, healthcare, utilities, basic materials for the week, and technology also on top for the week. Stock market map, well, pretty flat to slightly red, I would say, but except some names like Nvidia up 1%, we got Broadcom up 0.5%, then we got names like Netflix going up just a tiny bit, close to 1%. UNH up 1.30%. Everything else pretty much flat to red. And PLTR was actually down nearly 3%, and Tesla down 2.1%. Now, fear and greed index 56. It's still on greed. What do we got next week? Well, pending home sales on Monday. Nothing that's too big. Some ISM data, I think, right here on, but that's next week actually, the next following Monday. And jobless claims on Wednesday, but I don't think these things are going to move the market. And this is also another, a big holiday, brand new year. So happy new year to you guys, out there. And I hope, you enjoy your time with friends and family. And next year could be even better for us and even for the stock market, especially if we get some sort of a dip next year. So that's why today we're going to start off with something else. And I think we need to talk about gold and silver in this video before we get to even S&P 500, because the return of gold and silver was massive this year than S&P 500. So on silver, SLB was up 9% on Friday. And the more this thing goes up and up and up, it's getting really scary for the market. And why? I mean, look at this RSI just alone. Forget about any other things. Just look at the RSI, 91 on this monthly time frame. Now, if you look at the history of silver, what happened last time? What happened last time? You can see right here back in 2008. Then this was another top back in 2011. And then what happened from there, guys? We saw these types of moves. What happened here? You can see back in 2008, RSI, and this right here. And what is happening right now? I mean, even when further, 91, we're getting a reading past 91. And look at the upper Bollinger Band. And I'm not even talking about, most people look at daily chart, weekly, and all that. I'm not even doing a technical dive in here because, I mean, this thing is trading into blue skies right now, or maybe even over blue skies into Jupiter or something, right? Look at the move here. This is the monthly candle. We got few days to finish up the month. Look at this. Look at the RSI. Even if we get some sort of a retracement, I mean, you can see usually trades around that monthly 20 SMA, which is this blue line on your screen. You can see every time we're always there, right? You see the blue line, even the white line, it's trading around that level for a long, long time. And what do you see right now? That is the biggest technical right now. What do you see? A disconnection. This thing is nowhere near 5 SMA on this monthly, which is 48.98. Look at the 20. It's 33.9. It's nowhere near. So you're telling me this will just continue? What you saw on Friday was just a short squeeze. And yes, it can continue a little bit higher, but I'm telling you guys this, that market itself and even gold and silver, the more it goes up like this that we saw, I mean, look at the volume here. And day before we saw silver coming down filling that gap, and then found buyers. I mean, who the heck is buying here? Mostly people are shorting and getting squeezed out. And if you're buying like weekly puts or something, or even shorting shares, you're going to get squeezed out. So that is why, I mean, the market does not look good when you look at these type of moves, especially on silver, gold. I mean, all the metals, just crazy, crazy moves. And the headline was out, right? Shortage in China. They don't have enough silver. It's just insane. What happened before? A lot of the shortage through the pandemic. We got everything, right? It's just a headline to make this thing pop. Now, I wish I can say the same thing about Bitcoin, but we're nowhere near there, right? We're not close to all time highs. This year, definitely not there. So at some point, and I think it's going to happen very soon, money will come out of gold, silver, or the metals, and possibly will go elsewhere. Now, let's talk about gold also because we did see gold hitting another brand new all time high on Friday. On GDX, it's up 1.77%, and it's also at a brand new all-time high, just like the S&P. And we will have a new Fed chair come next year. We'll have the announcement from Trump. I'm assuming that it's going to happen in January. So he will come out. Basically, he's going to listen to Trump. He's going to start cutting rates, which is good news if you're buying home and, just getting stuff, maybe a car and whatnot. It's good. But also keep that in mind. Rate cuts, people think, and especially new investors, retail traders, they always think rate cuts are bullish. It's just going to pump the market up even higher. But they don't realize, and the market does not realize until market realizes that something actually broke. Unemployment is on the rise, 4.6. Yes, these numbers can be cooked up as well, but go out there, see for yourself. These layoffs recently we saw back in October, these are real, and these people are still looking for jobs. Not everybody finding a job quickly. And if unemployment is on the rise and Fed is actually cutting rates quicker, market will go on full panic mode. And market sitting at all-time high, gold sitting at all-time high, silver sitting at all-time high, and the Nasdaq also going for that all-time high, where Bitcoin and all the other cryptos are not. So there is a massive divergence right there, guys. And that is the part that I'm trying to explain to people, that we could have a massive, massive drawdown in the market if the market realizes that, oh, something broke. Now, a lot of people think when you call for a drawdown, you're looking for a crash. Crash can happen from all-time highs. Every time you can see back in 2008, 2007, what happened? Back in 2002, it was coming off of all-time highs. Even back in 2018 pandemic, what happened? Off of all-time highs. So be careful when you see these things are not lining up, especially everything at all-time high, but then cryptos are not, especially Bitcoin. It's definitely not nowhere near all-time highs. And we're gonna have a new Fed chair, and then we got high unemployment. I would love to see what the number come January, or even on to February next couple of months, these unemployment numbers, because the recession and especially the market, it's just not going to happen quickly. So when you say, like, I see a huge drawdown in the market, it's not going to happen overnight. Market has to realize that something broke, and until market realizes that, it's not going to have that. So you have to wait for it, and you have to see this data, even though these data are cooked up, and see the market reaction. But I think we're going to see that come 2026. And now I think we need to talk about VIX and then S&P 500. On VIX is actually up just 1%, not even 1%. It was up to almost 14 bucks. We went past 14, but again, this thing got absolutely crushed on Friday and back down to the lows again. So we still have that, our falling wedge pattern. We do not have a breakout yet. And what I would like to see here, if there is going to be a breakout, a huge green candle right here around 15 to 16 bucks. If that happens, we see some follow through, and that's going to trigger some sort of a pullback going into next year in the market, because this thing here, you can see time and time over and over, these levels like 14, 13 bucks. That's a crucial level here on VIX. Yes, it can go a little bit lower, but how much? Maybe $12. That's about it. But how much upside we have on S&P? Well, not much, at least in the short term. So whenever things are sitting at all-time high, you don't have much upside. And this falling wedge, you guys saw that, even I put it right on my thumbnail. We still don't have a breakout yet. We saw one. It was actually making some progress on Friday, but it actually failed. So we'll see how that goes going into Monday. But I'm not even going to say that it's going to happen this week, because this is also a big holiday week. And then we have, a couple of days off. Big boys are not trading. These trades are based on algos, some machines, and retail traders, investors trading. That's about it. And that's why you're seeing a lot of these moves that are actually fake moves in the market, especially on gold and silver. So I think the biggest move you're going to see come next year. And that's why we have to be careful when you look at VIX. It's just coiling up here inside this bullish falling wedge. And if this thing gets a breakout, which it did many times before, even right here, you can see a falling wedge type of pattern, and then we had a breakout. Even right here, we had one, and then we had a breakout to the upside. And now it's been selling off for past couple of days, couple of weeks now, I would say. So if this thing gets a move back up to the upside, you're going to see a drawdown in the S&P, especially that 14 bucks. That was the top of the range here where we came down to before, and now we're getting rejection there. So if this thing crosses over 14, we might get to see 15 to 16, maybe even 18 bucks on VIX, because it's trading right here at the lower Bollinger Band. So there is not much downside on VIX, but definitely there is downside in the S&P. So here on SPY, it's absolutely flat on the day. We hit another brand new all-time high, 691.66, and then we backed off. Even came down to 689, but you can see that previous rejection here at 689.7. Now that is acting as a support. We got a doji type candle with really low volume last week because of holiday, and I'm not expecting anything big, because I think the expected move is like $6.50 right here on SPY, and on the SPX is like 65 bucks. So we'll see how that goes. Of course, the range can expand even more. So here on S&P, there is nothing. If this thing breaks below that 689.7, we might see a drop down to 685, maybe down to the 20-day right here, which is at 683, and then we have support at 682 as well, and then these moving averages down here. Now there is a gap right here which looks closed on the daily, but it's still open. It was a fake move to close the gap. There is a gap around 681. So if we get some sort of a pullback into the gap, that would be some sort of a buying opportunity, as long as support holds there, which is going to act as a big support. And why? Because we're now trading over this massive candle, and if now we come back down here around that area, that would be a good area of support. Not to mention the 20 days sitting at 683, and the gap is near six. What is that? 681, 681 almost. So yes, we could see that. Now to the upside, if things pushes even higher for the new year, maybe we get to see 695. But I think that's about it for the S&P going into next week. On triple Q, it's absolutely flat on the day. But if you look at my screen, this was the highest high in the trend count and the all-time high. Since then, we came down and made a new low. We went back up to almost all-time high, but we did not break above this trend line. And now we saw another pullback here, and now we're going back up to that trend line. So if that actually breaks, which is going to be around that 626 mark, maybe even 627, you're going to see some continuation up to that 630 mark to close this gap just underneath 630. To the downside, there will be now support right here at the 20-day moving average, which is sitting right around that gap, 619, and just below that we have that gap up and go from last Monday, 617.62. I think that's going to be a better area if we get some sort of a pullback, and if you're trying to play this back up to the upside, unless that does not take place next week and we see a big pop and this thing comes back and retest, let's say 626, that would be something that look into it, especially if you're playing back up to the upside. Otherwise, I mean, we're just shopping here, guys. And even if you draw another line here, you're gonna see a wedge type of pattern, and we're just going back and forth, ping ponging. And so far, no breakout, and it's also diverging from S&P 500 because S&P 500 made a couple of all-time highs last week, but this one is nowhere near all-time highs. You can see pretty far away at 637. It's trading at 623. So definitely something to look for going into next week here on the Nasdaq. On Dow Jones, it's also flat on the day, and you can see that 485.44, we did not even retest, went back up, and just a bunch of chop. We got a doji type of candle, so we'll see how that goes next week. I think we could see a retest of the previous all-time high, which is at 489.66. Breaking over that could take us to 492, even 495 here on Dow Jones. To the downside, if this thing pulls back, this is going to be a key level to watch. It was trading below that entire week until Wednesday, and then going into that Friday session that it actually got over that 484.44. Because if we go underneath that, that was the previous all-time high, we could see a flush easily down to 481.19, 480, and below that there's going to be much more downside. And don't forget, S&P and Nasdaq, they came down and they closed that gap from this gap up and go before. But here on Dow, we still have this gap at 472, which is going to get filled at some point, I think, going into 2026, which could be the beginning of 2026, guys. On IWM, it's down 0.5%, but if you look at my screen closely, you can see this is a bear flag that is forming. We have a bear flag on the hourly right here, and then we had the breakdown, and now we are forming another bear flag. And if this is going to play out, we could be coming down to that 247 mark to close this gap on the hourly time frame. But look at the daily here, guys. We came down to where? Well, that 250 mark, pretty much at the lower end. And there is the 20-day sitting at 251-ish. So that's going to be a crucial level to see. But one more thing, we actually closed below this previous all-time high, which is just over 252. So if this thing does not get over 252 and some change right here, you're not going to see continuation back up to all-time highs at 258, the brand new all-time high that we saw a couple days ago. If this thing breaks down and the bear flag plays out, we could be down to that 248, 247 to close the gap and possibly even come down and retest 245, 50-day moving average, and this lower Bollinger Band on this daily time frame come next week. So before we wrap up this video, I want to talk about the US dollar, and you can see it was actually green on Friday and the market was pretty much flat. Now, if you look at it, this is from back in 2011. This was the bottom. We had a massive run. This was one of the bottom. We had a massive run. This was a massive run. Even right here, we came close to it and we saw a big significant move to the upside, and that was back in 2018. Then we came back again back into that pandemic, and then the dollar rises again all the way up to almost 115. Then we saw a drawdown here in the dollar. It was consolidating here. We saw another spike back up, and now it came back to where? That same old trend line that's been holding for many years now, and it's just resting there, consolidating, slightly going green on Friday. So watch out, guys. I mean, if dollar makes a move to the upside, even if it goes to like 100, 102, that's going to put pressure on the S&P. And that is the point I'm trying to make, that a lot of things are not lining up. Dollar sitting at that crucial multi-year trend line, VIX at pretty much 52-week low, not even pushing higher, market sitting at all-time high. We got precious metals sitting at all-time high. Does that look really bullish to you, where you could go and spend all your money and say, hey, let's just jump in all-time highs? You're going to buy high and sell even higher. Think about it. Is that what we do in the stock market? And that is all I have for you guys in this video. Let me know your thoughts down below in the comment section, and I'll definitely keep you guys updated.